stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Well, we're going to take another look at a couple of different types of tech companies with our strategists Dave Bartosiak and John Blank in town, in the house. Very rare appearances right here at the desk. Welcome to both of you.
It's good to be back.
Good to have you back periodically. Only periodically.
Only periodically, every once in a while.
Dave, we'll start with you. You've got an internet software company, Hortonworks.
That's right, Hortonworks.
And he does.
He hears a who, and he works. So this is a big data cloud analytics company, basically.
What's the market cap of Hortonworks?
This guy's going to ask me about market cap of Hortonworks. Off the top of my head, I don't know. Let me see. I got to look at our details.
I'm kind of curious. Is it a small cap or a large cap?
If you look at it's a smaller cap company. If you look at the detailed estimates page we have here on, or actually the quote overview on Zacks.com, you get all of this info and more.
Right.
So it's a $1.4 billion market cap here on Hortonworks. So we got plenty of upside potential to grow. And the good news about that growth, John and Terry, is if you look at the revenue growth. So right now it's 35% revenue growth quarter over quarter. They're going to do that next quarter also, they're hoping. But if you look at the EPS side of things, it's over 50% EPS growth. So they're really hoping that that's going to drive this thing a lot higher. Are you going to ask me PE now? Is that what we're going to do?
I'm going to ask you the PE now. Then I'm going to ask you for the value score so you can show everybody what that's all about.
This is the bad news, though. They're not quite making money yet, okay? But that's all right, because take a look at the price, consensus, and EPS surprise chart we have here on Zacks.com. And you could see, so the black line corresponds to right y-axis, which is price. Then the multicolored lines represent the evolution of our Zacks consensus estimate and coincide with this left y-axis here. Green arrows are earnings beats, red arrows are earnings misses. Now here's the good news, John, is that they turned the corner in mid-2016 and estimates really started ticking up. And it wasn't just year-over-year growth, but the bar would start here and then it would keep increasing throughout the course of the year. So yes, they are still losing money. So their forward PE is nah, right? But it doesn't matter because they're getting closer and closer to profitability and they have a huge revenue growth. So over time, we're hoping that these guys push into the green in terms of actually making money, but it's a huge growth story and a huge growth business. And last quarter's big earnings beat has really helped to accelerate things on a stock price side and on the EPS side. So the stock's up from under $10 in the beginning of 2017 to over $20 today.
It's that fast growing quality that gives it the potential for opportunity on the horizon.
And you know what I say, Terry? There's no momentum like momentum.
There you go. You are noted for saying that, among other things. John, tell us about Hitachi.
Hitachi. So Hitachi, H-T-H-I-Y, Japanese ticker. Probably know this name. It's a very famous old Japanese electronics company. But electronics for commercial experiences, like nuclear magnetic resonating machines for radiology labs. Very high-end CapEx. So the stock chart price and consensus I have up on my screen is going to tell the same story that Hortonworks is telling, which is that lows for the tech stocks were the early 2016 period. But what you see here is we had this earnings recession take us down there to the 2016 lows. And now we're doing nothing but momentum. And so I brought this thing in to also show the momentum. And what happened was the earnings estimates went up with the stock. Now we're at $75 a share, back to where the highs were in 2015. However, that's 3 years ago. And that this thing grows, is a big company growing 13% annual earnings growth. So 3 years of doing nothing but tread water is putting in place 39% earnings growth from here. So now we're at that Rubicon of $75, $80 a share on this stock. It can go above that and run another $30 a share if it breaks it. If it doesn't, you know, it's back to him telling me what to do. But if it does, we're on a run and we're going all the way to 110.
So another fast-growing stock, fast-moving stock?
I wouldn't say fast-growing. 13% annual earnings growth is not fast, but it's It's an A for value. You've got 11 PE ratio. You're making $7 a share, so it's a safer large cap play in tech space. But the momentum is definitely on for the stock.
All right, and I also read low price to sales ratio. Is that a good?
Yes, low price to sales ratio. Everything about this stock, because it's a Japanese stock, in terms of valuation, is really nice. And so the Japanese stock market has not been the place to be, but as you can see, since the lows are in the 2016, I think why I like it in the Japanese context is these are the types of CapEx you push into China, Taiwan, South Korea, Philippines, and so on. This is the type of Japanese company that does benefit from Asia, not Japan, and that's why I like Hitachi.
All right, do either of you own either of these?
I have Hortonworks in Momentum Trader right now.
Okay.
I have Hitachi and Large Cap Trader.
All right. I don't know why I assumed that for both of you, but whatever. Thank you both for being here. Good to see you again, as always.
And I think Grandpa had a Hitachi TV, maybe.
I had a radio, Hitachi radio, many years ago.
There you go.
Yeah.
That's probably worth disclosing.
And I just did. So thank you very much.
It's nuclear powered, by the way.
Nuclear power.
Don't forget, always more stock information on our website, Zacks.com. Get on over to the homepage and start going through it all with Dave and John. I'm Terry Ruffalo.